Chapter 1. Accounting for Share Capital. Number 1. Introduction. Company form came into existence after Industrial Revolution due to limitations of proprietorship and partnership forms in carrying out business on a large scale. In the modern age, capital is required for the business. So, company collects its own capital from several persons. Joint stock company is an association of persons and has an objective of carrying out some business for profit. Company has a separate legal existence by law. Incorporation, management, and winding up of company are governed by the provisions of Companies Act. In India, first time a separate act for company was made in 1956. It's known as Companies Act 1956. Recently, Indian government has incorporated New Companies Act 2013 after necessary amendments in previous act. Number 2. Types of companies. Based on establishment, the companies are mainly of two types. 1. Statutory companies or corporations. These companies or corporations are created by the special act of state or central legislature. For example, Life Insurance Corporation of India, the New India Assurance Company Limited, Gujarat State Finance Corporation, Gujarat State Civil Supplies Corporation, etc. 2. Registered companies. The Companies Acts are called registered companies. Most of the companies are formed under this type. As per the Indian Companies Act 2013, there are two main types of companies, private company and public company. Private company. A private company is one which by its articles of association 1. Restricts the right to transfer its shares. 2. Limits the number of its members to 200. 3. Prohibits any invitations to the public to subscribe for any securities, that is, shares or debentures of the company. 4. Must have at least 2 members. The name of a private company ends with the words Private Limited. Example, Panchuvila Cotton Private Limited, Apex Hydro Private Limited. As per New Companies Act, one person can form a company. Under the necessary legal provisions, any one person can form a one-person company, OPC, which has only one member. It is a company incorporated as a private company. Public company. A company which is not a private company is called public company. A public company must have at least 7 members. There is no restriction on the maximum number of members. The name of a public company ends with the word limited. Example, Karnavati Textiles Limited, Infosys Technologies Limited. Based on liability of members or shareholders, the companies are mainly of 3 types. 1. Company limited by shares. In these companies, liability of the shareholders is limited up to the extent of the face values of shares held by them. Most of the companies are of this kind. 2. Company limited by guarantee. In such companies, at the time of liquidation, the liability of shareholders is limited to a specified amount as guaranteed. Usually, such companies are not for the purpose of earning profit, but it is formed for the purpose of promoting different activities like arts, science, sports, culture, social welfare, etc. Example, Board of Control for Cricket in India. 3. Company by unlimited liability. In this type of company, there is no limit on the liability of its members. It means when a company suffers loss and the company's property is not sufficient to pay off its debts, the private property of its members will be used to meet the claims of creditors. As the risk involved in such companies is too high, such companies are not found in India even though permitted by the Companies Act. Types of companies. Based on establishment. Based on registration. Based on liability of members. Company limited by shares. In company limited by shares, public company, private company, one-person company. Company limited by guarantee. Company limited by unlimited liability. Number 3. Share and share capital. Meaning, nature and types. Capital of company is called share capital, which can be divided into transferable small denominations. Each such unit of denomination is known as share. To raise capital, company issues prospectus as required by law and invites public to purchase its shares. Those who purchase shares of company are called members or shareholders of company. As long as the shares are held by this person, he is called shareholder or co-owner of the company. For shareholders who have purchased or are in possession of the shares, indicate the proportion, that is ratio, of his ownership in the company. Each share is allotted a distinctive number. Share is an asset which is movable and transferable. According to the Companies Act, a company may issue two types of shares. 1. Preference share and 2. Equity share. 1. Preference share. Preference share is one which gives preferential right to its holder for receiving the dividend at a specified rate before any dividend paid to equity shareholder. When the company goes into liquidation, the preference shareholder has the preferential right for repayment of capital before the equity shareholder. Types of preference shares are as under. 1. Cumulative and non-cumulative preference share. In case of cumulative preference shares, if in any year the dividend on preference shares is not paid due to insufficient profit, such arrears of dividend shall be paid together with current year dividend in the year when there is sufficient profit. As against this, in case of non-cumulative preference shares, such arrears of dividend are not accumulated and are not paid in future. 2. Redeemable and irredeemable preference shares. If the amount of preference share is to be repaid, that is redeemed, by the company at the end of the stipulated period or after giving proper notice to the holder of the preference shares, such shares are called redeemable preference shares. Preference shares which are redeemed only at the time of liquidation of company are called irredeemable preference shares. After the implementation of Companies Act 2013, Company Limited by share does not issue irredeemable preference shares. 3. Participating and non-participating preference share. Preference shareholders who hold participating preference shares get fixed rate of dividend as decided by the company. In addition to this, they also have a right to participate in surplus profit remaining after distribution of specified dividend to equity shareholders subject to terms of participation. In the event of winding up of the company, if after paying the capital amount of both the preference and equity shareholders, there is still some surplus left, such shareholders are entitled to receive a proportion of surplus. These types of preference shares are called participating preference shares. Preference shareholders of non-participating preference shares get only a fixed rate of dividend and do not carry a right to participate in the surplus profits or in any surplus capital. 4. Convertible and non-convertible preference share. The preference shares which can be converted partly or fully into equity shares as per agreed terms at the time of issue are known as convertible preference shares. The preference shares which are not convertible into equity shares are known as non-convertible preference shares. Usually, the preference shares are non-convertible. 2. Equity share or ordinary share. The shares which are not preference shares are known as equity shares. Equity shareholders have voting rights in the company's meeting. Dividend on equity the shares which are not preference shares are known shares which is decided by the board of directors and approved by the shareholders in the general meeting is given only out of the profit remaining after distribution of dividend on preference shares at fixed rate. Company gives a dividend on equity shares every year on the basis of current year's profit, profit of the previous years, accumulated reserves, and possibilities of future profits, and also management policy of the company. At the time of liquidation of company, from the balance funds, equity shareholders have right to repayment of capital only after returning preference share capital. Equity share capital is known as principal share capital of the company. According to current provisions of the Companies Act, the equity share should have a minimum face value of ₹1. In the present scenario, most of the company have face value of each share is ₹1 or ₹10 or ₹100. Distinction between preference share and equity share. Basis of distinction. Preference shares, equity shares. 1. Rate of dividend. Dividend on preference shares are paid at a fixed rate. The rate of dividend on equity shares is not fixed. It may vary from year to year depending upon the availability of profits. 2. Arrears of dividend. If dividends is not paid on cumulative shares in any year, the arrears of dividend is paid against company's profit in future. Arrears of dividend on equity shares cannot be accumulated and so it is not paid against company's profit in future. 3. Preferential right as to the payment of dividend. They have a right to receive dividend before any dividend is paid on equity shares. Payment of dividend on equity shares is made after the payment of preference dividend. 4. Preferential right as to the payment of capital. Preference shareholders have a right to return of preference share capital in the case of winding up before any capital is returned to equity shareholders. Equity share capital is paid only when preference share capital is paid out fully. 5. Voting rights. Preference shareholders do not have any voting rights. Equity shareholders have voting rights. 6. Right to participate in management. They do not have a right to participate in management of the company. They have fully right to participate in management of the company. Types of share capital. 1. Authorized or nominal or registered capital. The maximum amount which a company can accumulate by share capital during its lifetime is called authorized share capital. It is stated in the Memorandum of Association and also stated at the time of registration. Hence, it's called registered capital. If there is a need to increase the authorized capital of a company in future, the same can be increased by passing a resolution in the general meeting of shareholders of company and also as per provisions of Companies Act. Authorized capital is also called nominal capital. For example, authorized capital of ABC Limited is ₹1 crore divided into 10 lakh equity share of ₹10 each. 2. Issued capital. The share capital issued by issue of shares out of authorized capital based on the need of the company in full or part is known as issued capital. For example, if 7 lakh shares are issued out of authorized capital of 10 lakh shares of ₹10 each, ₹70 lakh is known as issued capital of the company, being 7 lakh shares ₹10 each. Issued capital should not be more than authorized capital. 3. Subscribed capital. The value of shares for which applications are received out of issued share capital is known as subscribed capital. Subscribed share capital can be equal to or less than the issued capital. Even if share applications are received for more number of shares than the issued shares, company can allot shares only to the extent of share issued. 4. Called up capital. Company can call up an amount equal to face value of shares or lesser amount from the applicants to whom the shares are allotted. When company calls for lesser amount of the share, the balance amount can be called in future from the shareholders. Such amount called up on shares is known as called up capital. For example, if company has called up and ₹6 per share on 7 lakh share of ₹10 each, the called up capital will be ₹42 lakh. 5. Uncalled capital. It is a part of subscribed capital, a capital which is not yet called from the shareholders by the board of directors of the company is called uncalled capital. Uncalled capital is difference between subscribed capitals and call-up capital. Example, if the company has called for ₹6 per share on a share of face value of ₹10 each, then ₹4 per share is considered as uncalled capital. 6. Paid up capital. The amount received by the company from shareholders out of called up capital is known as paid up capital. If shareholder does not pay the amount called for any reason, there will be difference between the called up capital and paid up capital. For example, called up capital is rupees 42 lakh, that is 7 lakh shares into rupees 6 per share. If a shareholder holding 1000 shares could not pay first called money of and rupees 2 per share, then paid up capital shall be and 41,98,000, that is rupees 42 lakh minus rupees 2000. 7. Reserve capital. When management of the company feels that the called up capital is sufficient for the business requirement of the company and no further capital is required in future, the uncalled capital is converted into reserve capital by passing special resolution in the meeting of shareholders. Capital so reserved is known as reserve capital. Such reserve capital can be called up from shareholders only when the company goes into liquidation. Special resolution passed to this effect cannot be cancelled. Capital reserve. Capital reserves are those reserves which are created out of capital profit. Capital profits are those profits which are not earned in the normal course of the business. These reserves cannot be utilized for the distribution of dividends. Following transactions give rise to capital profit, which is to be transferred to capital reserved. 1. Profit on sale of fixed assets. 2. Profit on revaluation of fixed assets. 3. Profit prior to incorporation of company. 4. Premium on issue of shares and debentures. 5. Profit on redemption of debentures. 6. Profit on reissue of forfeited shares. 4. Steps for issue of equity shares. Company raises its capital by issuing equity share to public or by private placement. Detailed discussion or information about this is as under. A. For shares issued for public. 1. Permission for issue. Government of India made an important amendment in 1991 by repealing Capital Issues, that is Control Act 1947, and established Security and Exchange Board of India, that is SEBI. Earlier, the company were required to seek prior approval of government for public issue of shares, but now such company will have to prepare an offer document in accordance with SEBI guidelines and other legal requirements and submit the same to SEBI. Only after verification of the offer document by SEBI, they give permission for public issue of shares to the company. 2. Details of proposal to be sent to SEBI. In the offer document or proposal, the company has to disclose the number of shares issued, type of the share issued, and issue price of each share. In addition to this, detail regarding full amount to be paid at the time of application or amount to be called up in installments is also provided. 3. Offer to public. After complying with the formalities relating to public issue, the company invites public for subscription to shares by issue of prospectus. Company informs the details about subscription of shares to public by newspapers, by TV or by hoardings. 4. Detail shows in prospectus. Normally, following contacts are shown in prospectus. Name and address of the registered office of the company, name and address of the directors, objects of the company, risks involved in the company, consent from SEBI, authorized and issued capital of the company, and the number of shares now offered for subscription, dates of opening and closing of the issue, name and address of the merchant bank, guidelines about past years and future working of the company, etc. 5. For share application. After reading the prospectus, the public applies for shares in the company on a prescribed form. Each application must accompany the number of shares applied, name and address of applicant, their bank account number, their name and number of demand account, and also amount of total application money. The amount of share application, money by check or draft with application form must be deposited by the applicant in the scheduled bank which is specified by the company. The name of the scheduled bank is mentioned in the prospectus. Provisions for amount to be called up on applications are as under. A. According to Section 39 of Companies Act 2013, application money on shares should be minimum 5% of face value of shares. B. As per the present rules of SEBI, the amount to be paid with application of shares by applicant should not be less than 25% of issued price of the share. As per Section 24 of Companies Act 2013, SEBI provisions are applicable for issue of any securities and its transfer. Provision as per Company Law Board has not been applicable. In the present scenario, according to SEBI guidelines, new art has been established for share application in the public issue of the company. It's known as ASBA. 6. When shares are allotted. When the company receives the application forms, the shares are either fully or partially allotted to the applicant. Those applicants who are allotted shares are sent letters of allotment by the company in which number of shares allotted by the company to them are indicated. Those who are not allotted any single share by the company are sent letter of regret along with a check for the refund of application money, and now it is directly deposited in the applicant bank account. If company receives more or less number of share applicants than total number of issued share from the applicant, then provision for this has been discussed in the next point of this chapter. 7. Balance amount by installments. Generally, company calls for the full amount with share application or allotment. If company has not called up full amount with share application or allotment, the balance can be called up in one or more installments. Calls must be made strictly in accordance with the provisions of the Articles of Association. In the absence of the Articles of Association, the provisions of Table F of Schedule I of the Companies Act 2013 shall apply. 8. Other important points. When shares are issued by company, the company has to necessarily contract with minimum one bank or scheduled bank for its arrangement, for its transparency and also for financial transactions. Before issue of shares, company has to compulsorily contract with depository for demand of shares. Sometimes company gives an option to shareholders to get the shares in demat form or in physical form. In present circumstances, it is compulsory to open demat account. Any person can open or keep the demat account in any bank or any financial institution that holds legal permission to keep the demat accounts. Demat account is just like saving account or current account in the bank. Entry for money transactions are kept in saving account or current account. In the same manner, entry for purchase and sales transactions of the shares are kept in demat account. When any person purchases the shares, the number of purchased shares is credited means added to his demat account, and when any number of shares is sold, then it is debited means deducted from his account. B. Shares issued by private placement. As per the Companies Act 2013, a company may issue shares on private placement basis also. Sometimes, the promoters of a public company are confident of raising capital through private sources and contacts. In such a case, the company does not invite the public to subscribe for its shares, but make private placement of shares to promote their friends, their relatives, mutual funds, shareholders of group companies, non-resident Indians, financial institutions like Life Insurance Corporation of India, that is LIC, Unit Trust of India, that is UTI, Industrial Credit and Investment Corporation of India, that is ICICI, etc. When the shares are not offered to the public, the company need not issue a prospectus. Instead of issuing a prospectus, the promoters are required to prepare a draft prospectus known as a statement in lieu of prospectus and must file it with the register at least 3 days before the first allotment of either shares or debentures. In case of private placement of shares, the allotants will not sell either shares for a certain minimum period from the date of allotment. This period is known as lock-in. 5. Oversubscription and undersubscription of shares. If applications are received for more number of shares than the shares issued for public subscription, it is known as oversubscription. As company cannot allot more shares than the shares issued, it has to refund excess application money to applicants of shares. In these circumstances, company may 1. Allot full number of shares, or 2. Not allot any share, or 3. Allot partially number of shares to the share applicants against their share application. If applications are received for less number of shares than the shares issued, it is known as undersubscription. According to the SEBI guidelines, company must get share application money for at least 90% of the amount called up by public subscription. This minimum amount of subscription should be received within 30 days from the date of issue of prospectus. If company fails to get minimum subscription, then company cannot allot any share and within 15 days total amount should be returned to the applicants. If company fails to return this amount within 15 days, then interest at the rate of 15% per annum has to be paid for each day. 6. IPO and FPO. An initial public offering, that is IPO, is the first time that the share or stock of a private company is offered for purchase to the public. If a company has already issued the shares to the public through IPO process and wants to increase the capital fund, then follow-on public offer, that is FPO, is issued by the company to public or to investors. 7. Methods for issue of shares by company. Company can issue its shares by 3 ways. 1. At par. If the total amount payable by share subscribed to company is equal to the total face value of shares, the shares are said to be issued at par. For example, share of face value of Rs 10 issued at a price of Rs 10. 2. At premium. If the total amount payable by share subscribes to company is more than the total face value of shares, the shares are said to be issued at premium. For example, if share of face value of Rs 10 issued at a price of Rs 14, the additional amount of Rs 4 shall be considered as premium. Present provisions as per Companies Act 2013 and accounting effects of shares issued at premium have been discussed in detail in the following point in this chapter. 3. Issue of shares at discount. If the total amount payable by share subscribes to a company is less than the total face value of shares, the shares are said to be issued at discount. For example, if share of face value Rs 10 is issued at a price of Rs 9, the amount of Rs 1 shall be considered as discount. As per Section 53 of Companies Act 2013, companies would no longer be permitted to issue shares at a discount. The only shares that could be issued at a discount are sweat equity, wherein shares are issued to employees or directors in lieu of their services under Section 54 of 2013 Act. 8. Share capital transaction and its accounting effects. The following journal entries shall be passed in the books of the company in respect of share capital transactions. On share application. 1. When share application money is received. Date, particulars, ledger folio number, debit, credit, bank account debit to share application account credit, being receipt of share application money on dash, shares at Rs dash per share. 2. When applications are received for more shares than the shares issued and excess application money is to be refunded to share applicants. Date, particulars, ledger folio number, debit, credit, share application account debit to bank account credit, being refund of share application money at Rs dash per share on dash, shares due to non-allotment of shares. 3. When Board of Directors of the company approves the allotment of shares, then share application money in respect of share allotted is transferred to share capital account. Date, particulars, ledger folio number, debit, credit, share application account debit to share capital account credit, being transfer of share application money at Rs dash per share to share capital account in respect of dash shares allotted. On share allotment. 4. The applicants who are allotted shares become shareholders of the company. When share allotment money is called from shareholders, then date, particular, ledger folio number, debit, credit. Share allotment account debit to share capital account credit, being amount due on allotment on dash shares at the rate of rupees dash per share. 5. When the amount due on allotment is received, date, particulars, ledger folio number, debit, credit. Bank account debit to share allotment account credit, being amount received on allotment on dash shares at the rate of rupees dash per share. On share first call. 6. When the first call is made after receiving the allotment money, date, particulars, ledger folio number, debit, credit. Share first call account debit to share capital account credit, being first call due on dash shares at the rate of rupees dash per share. 7. When the share first call money is received, date, particulars, ledger folio number, debit, credit. Bank account debit to share first call account credit, being first call money received. Illustration 1. Vaidya Limited Company of Nadia issued 7,50,000 equity shares of rupees 10 each, and the amount thereon was payable as under: rupees 3 per share on application, rupees 4 per share on allotment, rupees 3 per share on first and final call. Company received applications for 7,50,000 shares, and all the applicants were allotted shares. Amounts due on allotment and calls were called at appropriate time and were all received on due dates. Past journal entries for about transactions in the books of company. Answer. At the time of number of shares into amount of installment, total amount, application 7,50,000 into 3 is equal to 22,50,000. Allotment 7,50,000 into 4 is equal to 30 lakh. First and final call 7,50,000 into 3 is equal to 22,50,000. Journal entries of Vaidya Limited. Date, particulars, ledger folio number, debit, credit. 1. Bank account debit 22,50,000 to equity share application account credit 22,50,000. Being money received on application for 7,50,000 shares at rupees 3 per share. 2. Equity share application account debit 22,50,000 to equity share capital account credit 22,50,000. Being transferred for share application money to share capital account in respect of share allotment. 3. Equity share allotment account debit 30 lakh to equity share capital account 30 lakh. Being allotment money due on 7,50,000 shares at rupees 4 per share. 4. Bank account debit 30 lakh to equity share allotment account credit 30 lakh. Being allotment money received. 5. Equity share first and final call account debit 22,50,000 to equity share capital account credit 22,50,000. Being amount due on first and final call at rupees 3 per share on 7,50,000 shares. 6. Bank account debit 22,50,000 to equity share first and final call account credit 22,50,000. Being amount received on first and final call. Total debit 1 crore 50 lakh, credit 1 crore 50 lakh. Illustration 2. Authorized capital of a limited company is divided into 25 lakh equity shares of rupees 10 each. Out of these, the company offered 20 lakh equity shares for public subscription. Company received applications for 19 lakh equity shares against the public subscription. Company called up total rupees 8 per share, and all the called up amounts were duly received. From the above information, show classification of share capital. Answer. Authorized capital 25 lakh equity shares of rupees 10 each, 2 crore 50 lakh. Issued capital 20 lakh equity shares of rupees 10 each, 2 crore. Subscribed capital 19 lakh equity shares of rupees 10 each, 1 crore 90 lakh. Called up and paid up capital, 19 lakh equity shares of rupees 10 each, rupees 8 per share called up and paid up, 1 crore 52 lakh. 9. Calls in arrears. When company makes call for allotment money or call money, and if some shareholder fails to pay such money on due date, such unpaid amount is transferred to call in arrears account. In such case, there are two methods to deal with accounting effect of calls in arrears. 1. Without opening call in arrears. Under this method, there is no need to open call in arrears account. When company calls for installment amount on any call, then the actual amount received from the shareholders is debited to bank account and is credited to relevant call account. So, the respective call account will show a debit balance equal to the unpaid amount of the call. When the unpaid amount is received from shareholder in future, the bank account is debited and the relevant call account is credited. 2. By opening calls in arrears account. Under this method, call in arrears account is opened. Any amount received from shareholders against any call is debited to bank account and amount which is not received from shareholders is debited to calls in arrears account. On a later date, when the arrears amount on call is received, bank account is debited and the calls is arrears account is credited. So, at the end, call in arrears is closed. Illustration 3. Jai Limited made a first call of rupees 2 per share on its 50,000 shares. One shareholder holding 1,000 shares did not pay the first call, but he paid due amount on first call after 1 month. Remaining all shareholders were paid all the amount due on due dates. Write journal entries in respect of above transactions in the books of company. Answer. Any one method can be adopted from the following. 1. Without opening calls in arrears account. 1. When amount due on first call, share first call account debit 1 lakh to share capital account credit 1 lakh. 2. By opening calls in arrears account. 1. When amount due on first call, share first call account debit 1 lakh to share capital account credit 1 lakh. 2. On receipt of first call, bank account debit 98,000 to share first call account credit 98,000. 2. On receipt of first call, bank account debit 98,000, call in arrears account debit 2,000 to share first call account credit 1 lakh. 3. On receipt of arrears of call money from shareholders, bank account debit 2,000 to shares first call account credit 2,000. 3. On receipt of arrears of call money from shareholders, bank account debit 2,000 to call in arrears account credit 2,000. Note: balance of call in arrears account is shown in the balance sheet as a deduction from the amount of subscribed but not fully paid up under subscribed share capital. 2. The company, if authorized by its articles of association, may charge interest and the specified rate on calls in arrears from the due date to the date of payment. 3. In case the articles of association of the company is silent, Table F of the Companies Act 2013 shall apply, which provides for interest at 10% per annum. However, the directors have the right to waive the interest on calls in arrears. 10. Calls in advance. If there is provision in the articles of association, a company can receive in advance a part or whole of the uncalled amount. In such cases, since the uncalled amount is received by company in advance from shareholders, the same is credited to call in advance account. When amount is received with application as advance of allotment or call money, the journal entry shall be as under: share application account debit, number of shares application into amount called per share on application. To share capital account credit, number of share allotted into amount called per share on application. To share allotment account credit, amount of allotment money received in advance. To calls in advance account credit, amount of call money received in advance. When share call money is received in advance with share allotment money, the following entry shall be passed. Bank account debit to share allotment account credit to calls in advance account credit. When the respective call is made due, then entry for calls in advance shall be passed as under calls in advance account debit to respective call account credit. Illustration 4. Kenna Chemical Company of Vadodara issued for public subscription 3 lakh equity shares of ₹100 each. The company decided to collect ₹40 per share with application, ₹35 per share on allotment, and ₹25 per share on first and final call. Company received applications for total 3,20,000 equity shares. Out of the applications, the company rejected applications for 20,000 equity shares and refunded application money thereof. Pranav, a shareholder of the company who was allotted 3,000 equity shares by the company, had paid amount due on first and final call in advance along with allotment money. Except this, allotment money and call money were called up at appropriate times and were all paid on due dates. Show journal entries in respect of above transactions in books of the company. Answer. Journal entries in the books of Kenna Chemicals Company. Date, particulars, ledger folio number, debit, credit. 1. Bank account debit 1 crore 28 lakh. To equity share application account credit 1 crore 28 lakh. Being received of share application money for 3,20,000 equity shares at ₹40 per share. 2. Equity share application account debit 1 crore 28 lakh. To equity share capital account credit 1 crore 20 lakh. To bank account credit 8 lakh. Being transfer of share application money in respect of 3 lakh equity shares allotted to equity shares capital account and refund the money to applicants in respect of 20,000 equity shares for rejected applications. 3. Equity share allotment account debit 1 crore 5 lakh. To equity share capital account credit 1 crore 5 lakh. Being allotment money of ₹35 per share due on 3 lakh equity shares allotted. 4. Bank account debit 1 crore 5 lakh 75,000. To equity share allotment account credit 1 crore 5 lakh. To calls in advance account credit 75,000. Being received of full amount of 3 lakh equity share allotment money and advance money from Pranav for first and final call at ₹25 per share on his 3,000 equity shares. 5. Equity share first and final call account debit 75 lakh. To equity share capital account credit 75 lakh. Being amount due on first and final call at ₹25 per share on 3 lakh equity shares. 6. Bank account debit 74 lakh 25,000. Calls in advance account debit 75,000. To equity first and final call account credit 75 lakh. Being received of amount called up on first and final call except the amount received in advance from Pranav. Total debit 6 crore 16 lakh 75,000. Credit 6 crore 16 lakh 75,000. For issue of shares at premium. When company has good reputation in market, has high profitability, internal and external factors are favorable, and also if company has already issued share in the past and the market price of its shares was more than the face value of shares, then company can issue shares at a price more than its face value or nominal value. When company issues shares at a price higher than the face value, the shares are said to be issued at premium. When shares are issued at premium, the amount received in excess of face value of shares is credited to a separate account. As per Companies Act, such amount is carried to securities premium account or securities premium reserve account. Points to be kept in mind relating to securities premium. 1. Amount of premium on share can be called along with share application or at the time of share allotment or at the time of application and allotment or at the time of share call separately or all together. 2. There is no legal restriction on issue of shares at a premium. 3. The premium on issue of shares is a capital profit and not a revenue profit. 4. The balance of securities premium account is shown in the equity and liabilities part of balance sheet under the head Reserve and Surplus as securities premium reserve. 5. Amount of securities premium cannot be utilized for payment of dividend in cash. Under Section 52, Subsection 2 of the Companies Act 2013, the amount of securities premium reserve may be used only for the following purposes. 1. In writing off the preliminary expenses of the company. 2. For writing off the commission or discount allowed on issue of share or debentures of the company. 3. For issuing fully paid bonus shares to the shareholders of the company. 4. For providing the premium payable on redemption of redeemable preference share. 5. For buyback of its own shares. When shares are issued at premium, the accounting entries in the books of company will be as under. Number 1. With application. 1. When amount of share premium is called with application money. Bank account debit to share application account credit. Amount called per share, including share premium amount. 2. When allotment is made against applications received. Share application account debit to share capital account credit to securities premium account credit. Number of shares allotted into amount of premium per share called with application. Number 2. On allotment. 1. When amount of share premium is called with allotment money. Share allotment account debit to share capital account credit to securities premium account credit. Number of shares allotted into amount of premium per share called with allotment. 2. When allotment money received. Bank account debit to share allotment account credit. Amount called on allotment with premium into number of shares allotted. Number 3. On share call. 1. When amount of share premium is called with share call money. Share call account debit to share capital account credit to securities premium account credit. Number of share allotted into amount called per share towards premium at the time of call. 2. When call money is received. Bank account debit to share call account credit. Amount called up with premium into number allotted shares. Illustration 5. Wala Manufacturing Limited of Dhanduka issued 4 lakh equity shares of ₹10 each at premium ₹60 per share. Amount was called up per share as under. On application ₹23 including premium ₹20. On allotment ₹34 including premium ₹30. On final call ₹13 including premium ₹10. Company received applications for 6 lakh shares. Excess applications were rejected and money paid thereon was refunded. Amount due on allotment and final call were called uptime. All amounts due on allotment and call were received except allotment and final call money on 500 shares held by Himmat Bhai and final call money on 300 shares held by Hima. Pass necessary journal entries in books of company for above transactions. Answer. On application, 6 lakh shares into ₹23 is equal to ₹1 crore 38 lakh minus rejected application 2 lakh shares into ₹23 is equal to ₹46 lakh, ₹92 lakh minus share capital 4 lakh shares into ₹03 is equal to ₹12 lakh. Securities premium 4 lakh shares into ₹20 is equal to ₹80 lakh. On allotment, share capital 4 lakh shares into ₹04 is equal to ₹16 lakh plus securities premium 4 lakh shares into ₹34 is equal to ₹1 crore 20 lakh, ₹1 crore 36 lakh minus calls in arrears 500 shares into ₹34 is equal to ₹17,000. Bank account ₹1 crore 35 lakh 83,000. On final call, share capital 4 lakh shares into ₹03 is equal to ₹12 lakh minus securities premium 4 lakh shares into ₹10 is equal to ₹40 lakh, ₹52 lakh minus calls in arrears 800 shares into ₹13 is equal to ₹10,400. Bank account ₹51 lakh 89,000. Journal entries of Wala Manufacturing Limited. Date Particulars: ledger folio number, debit, credit. 1. Bank account debit 1 crore 38 lakh. 2. Equity share application account credit 1 crore 38 lakh. Being amount received on 6 lakh shares at rupees 23 per share. 2. Equity share application account debit 1 crore 38 lakh. To equity share capital account credit 12 lakh. To securities premium account credit 80 lakh. To bank account credit 46 lakh. Being the amount of 4 lakh sectioned equity shares at rupees 3 per share and premium amount rupees 20 per share transferred to capital account and securities premium account and refund to share application money in respect of 2 lakh shares at rupees 23 per share for rejected applications. 3. Equity share allotment account debit 1 crore 36 lakh. To equity share capital account credit 16 lakh. To securities premium account credit 1 crore 20 lakh. Being the amount becomes due on 4 lakh shares at rupees 4 per share for capital and rupees 30 per share for securities premium. 4. Bank account debit 1 crore 35 lakh 83,000. Calls in arrears account debit 17,000. To equity share allotment account credit 1 crore 36 lakh. Being full amount received of equity share allotment money on all shares except non-receipt of allotment money of rupees 17,000 on 500 shares of Himmat Bhai at rupees 34 per share. 5. Equity share final call account debit 52 lakh. To equity share capital account credit 12 lakh. To securities premium account credit 40 lakh. Being the amount becomes due on 4 lakh shares at rupees 3 per share for capital and rupees 10 per share for securities premium. 6. Bank account debit 51 lakh 89,600. Calls in arrears account debit 10,400. To equity share final call account credit 52 lakh. Being full amount received of equity share final call money on all shares except non-receipt of final call money of rupees 10,400 on 500 shares of Himmat Bhai and 300 shares of Hima at rupees 13 per share. Total debit 6 crore 52 lakh. Credit 6 crore 52 lakh. Illustration 6. Authorized capital of Mansoori Limited of Dahod was 7 lakh equity shares of rupees 10 each. On 4th July 2017, company issued 4 lakh 50,000 equity shares at a premium of rupees 16 per share for public subscription. Amount was called up for share as under. On 4th July 2017, rupees 10 per share, including premium of rupees 6 per share with application. On 4th August 2017, rupees 14 per share, including premium of rupees 10 per share with allotment. On 4th September 2017, rupees 2 per share with first and final call. The subscription was closed on 6th July 2017 as it was full subscribed. Board of Directors allotted all the shares of share application. Abdul holding 600 shares did not pay money due on allotment and first and final call, where Harun holding 400 shares had not paid first and final call money. Except this, all these sums due were received by the following dates. Share allotment money by 7th August 2017. Share first and final call money by 7th September 2017. Pass necessary journal entries except for cash in the books of company for above transactions and also prepare bank account. Answer. Necessary calculation. On application, share capital 4,50,000 shares into rupees 4 is equal to rupees 18 lakh plus securities premium 4,50,000 shares into rupees 6 is equal to rupees 27 lakh. Bank account is equal to rupees 45 lakh. On allotment, share capital 4,50,000 shares into rupees 04 is equal to rupees 18 lakh plus securities premium 4,50,000 shares into rupees 10 is equal to rupees 45 lakh is equal to rupees 63 lakh minus calls in arrears 600 shares into rupees 14 is equal to rupees 8,400. Bank account rupees 62,91,600. on first and on final call. Share capital 4,50,000 shares into rupees 2 is equal to rupees 9 lakh minus calls in arrears 1,000 shares into rupees 2 is equal to rupees 2,000. Bank account rupees 8,98,000. Journal entries of Mansoori Limited. Date, particulars, ledger folio number, debit, credit. 2017 July 6. Equity share application account debit 45 lakh. To equity share capital account credit 18 lakh. To securities premium account credit 27 lakh. Being the amount of 4,50,000 sanctioned equity shares at rupees 4 per share and premium amount at 6 per share transferred to capital account and securities premium account respectively. August 4. Equity share allotment account debit 63 lakh. To equity share capital account credit 18 lakh. To securities premium account credit 27 lakh. Being the amount of 4,50,000 sanctioned equity shares at rupees 4 per share and premium amount at rupees 6 per share transferred to capital account and securities premium account respectively. August 7. Calls in arrears account debit 8,400. To equity share allotment account credit 8,400. Being the amount due on 600 shares at rupees 14 per share could not be received. September 4. Equity share first and final call account debit 9 lakh. To equity share capital account credit 9 lakh. Being amount becomes due on 4,50,000 share for first and final call. September 7. Calls in arrears account debit 2,000. To equity share first and final call account credit 2,000. Being the amount due on 1,000 shares at 2 per share could not be received. Total debit 1 crore 17 lakh 10,400. Credit 1 crore 17 lakh 10,400. Cash book, that is bank column only in the books of Mansoori Limited. Date, particulars, ledger folio number, amount 2017 July 6. To equity share application account, receive money on 4,50,000 shares at 10 per share, 45 lakh. August 7. To equity share allotment account, received money on 4,49,400 shares except 600 shares on allotment, 62,91,600. September 16. To equity share first and final call account, receive money on 4,49,400 shares except 1,000 shares on first and final call, 8,98,000. 12. Forfeiture of shares. Due to any reason, if any shareholder fails to pay the amount due on allotment or on any call within the informed specific period by company, then company can forfeit his share by completing due formalities. In normal situation, that is usually, directors of the company are empowered by Articles of Association of Company to forfeit the shares. Follow the rules laid down in the Articles of Association for the procedure of forfeiture of shares, or if no rules are given in articles for this, the provision of Table F of Schedule 1 of the Companies Act 2013 shall apply. So, a process of forfeiture or cancellation of share by directors of company is called forfeiture of shares. After the forfeiture, the name of shareholder is removed from the register of members. It means now this person is not called a shareholder of the company. For forfeited shares, the amount already paid by the shareholders to the company is forfeited by the company. It means this amount is not returned to the shareholders. Number of shares decreases due to forfeiture of shares, and hence share capital account is debited. The amount already paid by shareholder in the company also gets forfeited with forfeiture of share, and the same is credited to share forfeiture account. When shares are forfeited, the following entries are passed in the books of company under different situations. 1. When shares are issued at par or at premium and full amount of premium is received, share capital account debit. To forfeited share account credit. To share allotment account credit. To first and final share call account credit. Number of shares forfeited into amount called up per share on capital account. Amount received on forfeited shares towards Capital account excluding premium. Amount called on allotment but not received. Amount called on call but not received. 2. When shares are issued at premium and share premium amount is not received. Share capital account debit, securities premium account debit, to forfeited share account credit, to share allotment account credit, to share call or calls in arrears account credit. Number of shares forfeited into amount called up per share on capital account. Number of shares forfeited into amount of premium called up but not received. Total amount received. Amount called on allotment but not received. Amount called on call but not received. Illustration 7. 1. M Limited forfeited 600 equity shares of one shareholder Govind for non-payment of final call of Rs 3 per share. Company had called up Rs 10 per share as face value of share from shareholders. Govind had paid Rs 4 per share on application and Rs 3 per share on allotment. Past journal entry for forfeiture of shares. 2. N Limited forfeited 2,400 equity shares of Rs 10 each of Shri Prema Bhai for non-payment of Rs 2 per share on share first call. An amount of Rs 3 per share on application and Rs 3 per share on allotment is received by company from Shri Prema Bhai. The company has called up Rs 8 per share till date. Past journal entry for forfeiture of shares in the books of company. 3. Q Limited had called total Rs 22 per share, including premium of Rs 12 per share, from the shareholders. Kinjal had paid Rs 15 per share, including premium of Rs 12 per share, on application and Rs 4 per share on allotment on her 500 shares. Kinjal failed to pay Rs 3 per share on final call on her 500 shares. So company forfeited her shares. Past the journal entries in the books of company for forfeiture of shares. 4. P Limited had issued share of Rs 10 each at 50% premium. Company had called Rs 4 with application, Rs 8 including premium, on allotment and Rs 3 on first and final call. Shri Jigar, who holds 600 shares, paid only application money to company. The company forfeited his shares after first and final call. Give a journal entry in books of company for forfeiture of shares. Answer. 1. Journal entry in the books of M Limited. Date, particulars, ledger folio number, debit, credit. Equity share capital account debit 6,600 shares into Rs 10. To share forfeiture account 600 shares into Rs 7, 4,200. To share final call account 1,800. 600 share into Rs 3, being forfeiture of 600 shares of Govind. Explanation. Company forfeited shares of Govind, so his shares are cancelled. Amount called up per share on capital account Rs 10 per share will be debited to share capital account. Amount of Rs 7 per share paid by Govind will be credited to share forfeiture account and amount not paid towards capital account for final call at Rs 3 per share will be credited to share final call account. 2. Journal entry in the books of N Limited. Date, particulars, ledger folio number, debit, credit. Equity share capital account debit 19,200. 2,400 shares into Rs 8. To forfeiture account credit 14,400. 2,400 shares into Rs 6. To share first call account or calls in arrears account credit 4,800. 2,400 shares into Rs 2. Being non-payment of first call money on 2,400 shares by Prema Bhai, his shares forfeited after first call. Explanation. Company forfeited Prema Bhai's shares immediately after first call. So, in above journal entry, equity share capital account is debited with Rs 19,200. Number of share forfeited 2,400 shares into Rs 8 per share called up on capital account. 3. Journal entry in the books of Q Limited. Date, particulars, ledger folio number, debit, credit. Equity share capital account debit 5,000. 500 shares into rupees 10. To share forfeiture account credit 3,500. 500 shares into rupees 7. To share final call account credit 1,500. 500 shares into rupees 3. Being non-payment of final call amount by Kinjal, her share are forfeited. Explanation. Kinjal has already paid premium amount at the time of application, so that would not be given any effect of securities premium on forfeiture. Amount paid on application rupees 3 per share and on allotment rupees 4 per share. Total rupees 7 per share for face value of share will be credited to share forfeiture account. 4. Journal entries in the books of P Limited. Date, particulars, ledger folio number, debit, credit. Equity share capital account debit 6,000. 600 shares into rupees 10. Securities premium account debit 3,000. 600 shares into rupees 5. To share forfeiture account credit 2,400. 600 shares into rupees 4. To share allotment account credit 4,800. 600 shares into rupees 8. To share first and final call account credit 1,800. 600 shares into rupees 3. Being forfeiture of 600 shares of Jigar for non-payment of allotment money and call money after paying share application money. Explanation. Shri Jigar has not paid total rupees 8 per share on allotment with premium. So here total amount of rupees 3,000, that is 600 shares into rupees 5 debited to securities premium account, where total amount rupees 4,800, that is 600 shares into rupees 8 has been credited to share allotment account. For reissue of forfeited shares, company can reissue forfeited shares. For this, directors of the company have the full authority by law. Directors can reissue these shares at par, at premium or at discount. On reissue of shares, the company must get at least an amount equal to the amount not received on capital account on forfeited shares. It means at the time of reissue of forfeited shares, company can give maximum discount to new shareholders up to the amount forfeited. So, the maximum discount that can be given on reissue of forfeited shares is equal to the amount forfeited on capital account which was received on these shares. In such case, there is no need for any sanction for the discount amount. Example, a shareholder has paid rupees 7 per share on face value of rupees 10 per share and has not paid rupees 3 per share. If his shares are forfeited and reissued thereafter, maximum discount up to rupees 7 per share can be given on reissue thereof. On reissue of forfeited shares, amount received from new shareholders, that is purchaser, is debited to bank account. If the shares are issued at discount, then amount of discount is debited to share forfeiture account. Here, due to reissue of shares, amount of face value of shares is credited to share capital account. Following journal entries are passed for reissue of forfeited shares under different situations. 1. If the forfeited shares are reissued at par, bank account debit to share capital account credit. 2. If the forfeited shares are reissued at premium, bank account debit to share capital account credit to securities premium account credit. 3. If the forfeited shares are reissued at discount, bank account debit, number per share reissued into amount per share at which shares are issued. Share forfeited account debit, number per share reissued into discount amount per share. To share capital account credit, number per share reissued into paid up amount per share. Balance of share forfeiture account. After the reissue of forfeited shares, the credit balance left in the share forfeiture account for those shares is transferred to capital reserve account. Share forfeiture is not day-to-day business transaction of a company. Any surplus or profit on account of forfeiture of share is a capital profit. Therefore, the amount of forfeited shares is transferred to capital reserve account. The following entry will be passed in the book of company. Share forfeiture account debit to capital reserve account credit. Being transfer of balance of forfeited share account in respect of reissued shares to capital reserve account. Other points to be kept in mind while reissuing forfeited shares. 1. Unless the forfeited shares are reissued, the balance of the forfeited shares account is added to paid up capital under subscribed share capital in the note to account on share capital. 2. When a part of forfeited shares is only reissued, the proportionate amount only in respect of forfeited shares which are reissued will be transferred to capital reserve account. Credit balance of forfeited shares will continue on other shares which are not yet reissued. 3. Shares in respect of which any amount is not paid can be forfeited by Board of Directors by passing a resolution at any time after allotment or first call or final call. Such forfeited shares can be reissued immediately after forfeiture, that means after allotment or after first call or after final call. Out of forfeited shares, company reissued 1,200 equity shares to nil on 4th November 2017 at Rs 8 per share, and remaining equity shares were reissued on 22 November 2017 to Harsh at Rs 7 per share. Answer. Journal entries in the books of company. Date, particulars, ledger folio number, debit, credit. 10A. 1st March 2017. Equity share capital account debit 5,000. 500 shares into Rs 10. To share final call account credit 3,500. 500 shares into Rs 7. To share final call account credit 1,500. 500 shares into Rs 3. Being forfeited 500 shares of Harnish due to non-payment of share final call amount. 2nd April 2017. Bank account debit 4,000. 500 shares into Rs 8. Share forfeiture account debit 1,000. 500 shares into Rs 2. To equity share capital account credit 5,000. 500 shares into Rs 10. Being reissue of 500 forfeited shares at Rs 8 per share. 2nd April 2017. Share forfeiture account debit 2,500 to capital reserve account credit 2,500. Being balance of share forfeiture account Rs 3,500 credit minus Rs 1,000 debit is equal to Rs 2,500 transfer to capital reserve account. 10B. 10 July 2017. Equity share capital account debit 3,500. 350 shares into Rs 10. To share forfeiture account credit 1,750. 350 shares into Rs 5. To shares first call account credit 1,050. 350 shares into Rs 3. To shares second and final call account credit 700. 350 shares into Rs 2. Being forfeiture of 350 shares of Avda for non-payment of share first call and share second final call. 12th August 2017. Bank account debit 2,450. 350 shares into Rs 7. Share forfeiture account debit 1,050. 350 shares into Rs 3. To equity share capital account credit 3,500. 350 shares into Rs 10. Being reissue of 350 forfeited shares at Rs 7 per share. 12 August 2017. Share forfeiture account debit 700 to capital reserve account credit 700. Being balance of share forfeiture account Rs 700, that is Rs 1,750 credit minus Rs 1,050 debit, transfer to capital reserve account. 10C. 14 September 2017. Equity share capital account debit 12,000. 1,200 shares into Rs 10. To share forfeiture account credit 8,400. 1,200 shares into Rs 7. To shares final call account credit 3,600. 1,200 shares into Rs 3. Being forfeiture of 1,200 shares of Thrumal for non-payment of final call amount. 16th October 2017. Bank account debit 4,000. 800 shares into rupees 5. Share forfeiture account debit 4,000. 800 shares into rupees 5. To equity share capital account credit 8,000. 800 shares into 10. Being reissue of 800 shares at a discount of rupees 5 per share out of 1,200 forfeited shares. 16th October 2017. Share forfeiture account debit 1,600 to capital reserve account credit 1,600. Being transfer of proportionate credit balance of share forfeiture account in respect of 800 shares out of 1,200 shares of Drumal to capital reserve account. Credit balance of share forfeiture is rupees 8,400 for 1,200 shares. Out of these, 800 shares are reissued. So proportionate credit balance of share forfeiture is rupees 5,600. From this subtract debit balance of share forfeiture of rupees 4,000, credit balance of share forfeiture of rupees 1,600 transfer to capital reserve account. Credit balance of share forfeiture account of rupees 2,800 will continue on 400 shares which are not reissued. 10D. 1st August 2017. Equity share capital account debit 7,000. 700 shares into rupees 10. Securities premium account debit 35,000. 700 shares into rupees 50. To shares forfeiture account credit 2,100. 700 shares into rupees 3. To shares allotment account credit 37,800. 700 shares into rupees 54. To shares final call account credit 2,100. 700 shares into rupees 3. Being forfeited 700 shares of Athens for non-payment of amount on share final call. 10 September 2017. Bank account debit 17,500. 500 shares into rupees 35. To equity share capital account credit 5,000. 500 shares into rupees 10. To securities premium account credit 12,500. 500 shares into rupees 25. Being reissue of 500 shares at rupees 35 per share, including premium of rupees 25 out of 700 forfeited shares. 10 September 2017. Share forfeiture account debit 1,500 to capital reserve account credit 1,500. Being transfer of proportionate amount of rupees 1,500 to capital reserve account on reissued 500 shares against credit balance of share forfeiture account of rupees 2,100 on 700 forfeiture shares. Credit balance of share forfeiture account 700 shares into rupees 3 is equal to rupees 2,100 less credit balance of share forfeiture account on reissued forfeited shares 500 shares into rupees 3 is equal to rupees 1,500. Balance of share forfeiture account will continue of balance 200 shares into rupees 600. 10E. 11 October 2017. Equity share capital account debit 20,000. 2,000 shares into rupees 10. To shares forfeiture account credit 10,000. 2,000 shares into rupees 5. To shares first call account credit 6,000. 2,000 shares into rupees 3. To shares final call account credit 4,000. 2,000 shares into rupees 2. Being forfeiture of 2,000 shares of Girish for non-payment of share final call. 4th November 2017. Bank account debit 9,600. 1,200 shares into rupees 8. Share forfeiture account debit 2,400. 1,200 shares into rupees 2. To equity share capital account credit 12,000. 1,200 shares into rupees 10. Being reissue of 1,200 shares to nil at rupees 8 per share out of 2,000 forfeited share. 4th November 2017. Share forfeiture account debit 3,600 to capital reserve account credit 3,600. Being balance of share forfeiture for 1,200 equity shares transferred to capital reserve account. Calculation. Proportional amount of share forfeiture for 1,200 shares rupees 6,000 less amount debited to share forfeiture account rupees 2,400. Capital reserve account rupees 3,600. 22 November 2017. Bank account debit 5,600. 800 shares into rupees 7. Share forfeiture account debit 2,400. 800 shares into rupees 3. To equity share capital account credit 8,000. 800 share into rupees 10. Being reissue of balance 800 shares to her share rupees 7 per share out of 2,000 forfeited shares. 22 November 2017. Share forfeiture account debit 1,600 to capital reserve account credit 1,600. Being balance of share forfeiture account of 800 equity shares transfer to capital reserve account. Calculation. Proportional amount of share forfeiture for 800 shares rupees 4,000 less amount debited to share forfeiture account rupees 2,400 to capital reserve account rupees 1,600. Out of forfeited shares, company reissued 1,200 equity shares to nil on 4th November 2017 at rupees 8 per share, and remaining equity shares were reissued on 22 November 2017 to Harsh at rupees 7 per share. Answer. Journal entries in the books of company. Date, particulars, ledger folio number, debit, credit. 10A. 1st March 2017. Equity share capital account debit 5,000. 500 shares into rupees 10. To share final call account credit 3,500. 500 shares into rupees 7. To share final call account credit 1,500. 500 shares into rupees 3. Being forfeited 500 shares of Harnish due to non-payment of share final call amount. 2nd April 2017. Bank account debit 4,000. 500 shares into rupees 8. Share forfeiture account debit 1,000. 500 shares into rupees 2. To equity share capital account credit 5,000. 500 shares into rupees 10. Being reissue of 500 forfeited shares at rupees 8 per share. 2nd April 2017. Share forfeiture account debit 2,500 to capital reserve account credit 2,500. Being balance of share forfeiture account rupees 3,500 credit minus rupees 1,000 debit is equal to rupees 2,500 transfer to capital reserve account. 10B. 10 July 2017. Equity share capital account debit 3,500. 350 shares into rupees 10. To share forfeiture account credit 1,750. 350 shares into rupees 5. To shares first call account credit 1,050. 350 shares into rupees 3. To share second and final call account credit 700. 350 shares into rupees 2. Being forfeiture of 350 shares of Avda for non-payment of share first call and share second final call. 12th August 2017. Bank account debit 2,450. 350 shares into rupees 7. Share forfeiture account debit 1,050. 350 shares into rupees 3. To equity share capital account credit 3,500. 350 shares into rupees 10. Being reissue of 350 forfeited shares at rupees 7 per share. 12 August 2017. Share forfeiture account debit 700 to capital reserve account credit 700. Being balance of share forfeiture account rupees 700, that is rupees 1,750 credit minus rupees 1,050 debit transfer to capital reserve account. 10C. 14 September 2017. Equity share capital account debit 12,000. 1,200 shares into rupees 10. To share forfeiture account credit 8,400. 1,200 shares into rupees 7. To shares final call account credit 3,600. 1,200 shares into rupees 3. Being forfeiture of 1,200 shares of Thrumal for non-payment of final call amount. 16th October 2017. Bank account debit 4,000. 800 shares into rupees 5. Share forfeiture account debit 4,000. 800 shares into rupees 5. To equity share capital account credit 8,000. 800 shares into 10. Being reissue of 800 shares at a discount of rupees 5 per share out of 1,200 forfeited shares. 16th October 2017. Share forfeiture account debit 1,600 to capital reserve account credit 1,600. Being transfer of proportionate credit balance of share forfeiture account in respect of 800 shares out of 1,200 shares of Drumal to capital reserve account. Credit balance of share forfeiture is rupees 8,400 for 1,200 shares. Out of these, 800 shares are reissued. So proportionate credit balance of share forfeiture is rupees 5,600. From this subtract debit balance of share forfeiture of rupees 4,000, credit balance of share forfeiture of rupees 1,600 transfer to capital reserve account. Credit balance of share forfeiture account of rupees 2,800 will continue on 400 shares which are not reissued. 10D. 1st August 2017. Equity share capital account debit 7,000. 700 shares into rupees 10. Securities premium account debit 35,000. 700 shares into rupees 50. To shares forfeiture account credit 2,100. 700 shares into rupees 3. To shares allotment account credit 37,800. 700 shares into rupees 54. To shares final call account credit 2,100. 700 shares into rupees 3. Being forfeited 700 shares of Athans for non-payment of amount on share final call. 10 September 2017. Bank account debit 17,500. 500 shares into rupees 35. To equity share capital account credit 5,000. 500 shares into rupees 10. To securities premium account credit 12,500. 500 shares into rupees 25. Being reissue of 500 shares at rupees 35 per share including premium of rupees 25 out of 700 forfeited shares. 10 September 2017. Share forfeiture account debit 1,500 to capital reserve account credit 1,500. Being transfer of proportionate amount of rupees 1,500 to capital reserve account on reissued 500 shares against credit balance of share forfeiture account of rupees 2,100 on 700 forfeiture shares. Credit balance of share forfeiture account 700 shares into rupees 3 is equal to rupees 2,100 less credit balance of share forfeiture account on reissued forfeited shares 500 shares into rupees 3 is equal to rupees 1,500. Balance of share forfeiture account will continue of balance 200 shares into rupees 600. 10E. 11 October 2017. Equity share capital account debit 20,000. 2,000 shares into rupees 10. To shares forfeiture account credit 10,000. 2,000 shares into rupees 5. To shares first call account credit 6,000. 2,000 shares into rupees 3. To shares final call account credit 4,000. 2,000 shares into rupees 2. Being forfeiture of 2,000 shares of Girish for non-payment of share final call. 4th November 2017. Bank account debit 9,600. 1,200 shares into rupees 8. Share forfeiture account debit 2,400. 1,200 shares into rupees 2. To equity share capital account credit 12,000. 1,200 shares into rupees 10. Being reissue of 1,200 shares to nil at rupees 8 per share out of 2,000 forfeited share. 4th November 2017. Share forfeiture account debit 3,600 to capital reserve account credit 3,600. Being balance of share forfeiture for 1,200 equity shares transferred to capital reserve account. Calculation. Proportional amount of share forfeiture for 1,200 shares rupees 6,000 less amount debited to share forfeiture account rupees 2,400. Capital reserve account rupees 3,600. 22 November 2017. Bank account debit 5,600. 800 shares into rupees 7. Share forfeiture account debit 2400. 800 shares into rupees 3 to equity share capital account credit 8000. 800 share into rupees 10 being reissue of balance 800 shares to her share rupees 7 per share out of 2000 forfeited shares. 22 November 2017. Share forfeiture account debit 1600 to capital reserve account credit 1600 being balance of share forfeiture account of 800 equity shares transferred to capital reserve account. Calculation. Proportional amount of share forfeiture for 800 shares rupees 4000 less amount debited to share forfeiture account rupees 2400 to capital reserve account rupees 1600. Illustration 9. Dharam Metals Limited of Jamnagar issued 8 lakh equity share of rupees 10 each premium of rupees 30 per share. The amount was payable as under rupees 13 including premium of rupees 10 per share on application, rupees 23 including premium of rupees 20 per share on allotment, rupees 4 per share on final call. Company received share application for 8 lakh shares and all the applications were allotted shares. Vipul, who was allotted 1500 shares, did not pay money due on allotment and hence his shares were forfeited by company after allotment. Company reissued all these 1500 shares before final call at rupees 5 per share. Hema, who was allotted 500 shares, did not pay money due on final call and therefore her shares were forfeited by company. Company reissued these 500 shares at maximum permissible discount. Past journal entries for above transactions in the books of company. Answer. On application, share capital 8 lakh shares into rupees 3 is equal to rupees 24 lakh plus securities premium 8 lakh shares into rupees 10 is equal to rupees 80 lakh. Bank account rupees 1 crore 4 lakh. On allotment, share capital 8 lakh shares into rupees 3 is equal to rupees 24 lakh plus securities premium 8 lakh shares into rupees 20 is equal to rupees 1 crore 60 lakh is equal to rupees 1 crore 84 lakh minus calls in arrears 1500 shares into rupees 23 is equal to rupees 34,500. Bank account is equal to rupees 1 crore 83 lakh 65,500. On forfeiture shares 1500 shares of Vipul. Vipul has paid only rupees 3 for 1500 shares application which rupees 4500 will be credited to share forfeiture account. On final call, 8 lakh shares into rupees 4 is equal to rupees 32 lakh minus calls in arrears 500 shares into rupees 4 is equal to rupees 2000 is equal to rupees 31 lakh 98,000. On forfeiture share 500 shares of Hema. Hema has paid in total rupees 6 for 500 shares, rupees 3 while share application and rupees 3 while allocation. Therefore, 500 shares into rupees 6 is equal to rupees 3000 will be credited to share forfeiture account. Journal entries of Dharam Metals Limited. Date, particulars, ledger folio number, debit, credit. 1. Bank account debit 1 crore 4 lakh. To equity share application account credit 1 crore 4 lakh. Being the amount of share application money received at 13 per share on 8 lakh shares. 2. Equity share application account debit 1 crore 4 lakh. To equity share capital account credit 24 lakh. To securities premium account credit 80 lakh. Being the amount of share application is transferred to share capital account and securities premium account. 3. Equity share allotment account debit 1 crore 84 lakh. To equity share capital account credit 24 lakh. To securities premium account credit 1 crore 60 lakh. Being the amount becomes due on 8 lakh shares at rupees 3 per share for allotment and at rupees 20 per share for premium. 4. Bank account debit 8 crore 83 lakh 65,500. Calls in arrears account debit 34,500. To equity share allotment account credit 1 crore 84 lakh, being the amount received on 7,98,500 shares at Rs 23 per share, which was due on allotment. 5. Equity share capital account debit 9,000, 1,500 shares into Rs 6. Securities premium account debit 30,000, 1,500 shares into Rs 20. To equity share forfeiture account credit 4,500. To calls in arrears account credit 34,500. Being forfeited 1,500 shares of Vipul for non-payment of share allotment. 6. Bank account debit 7,500, 1,500 shares into Rs 5. Equity share forfeiture account debit 1,500. To equity share capital account credit 9,000. Being 1,500 forfeited shares reissued at Rs 5 per share. 7. Equity share forfeiture account debit 3,000. To capital reserve account credit 3,000. Being credit balance of share forfeiture account is transferred to capital reserve account. 8. Equity share final call account debit 32 lakh. To equity share capital account credit 32 lakh. Being the amount becomes due on 8 lakh shares at Rs 4 per share for final call. 9. Bank account debit 31,98,000. Calls in arrears account debit 2,000. To equity share final call account credit 32 lakh. Being the amount of share final call money received on 7,99,500 shares at Rs 4 per share. 10. Equity share capital account debit 5,000, 500 shares into Rs 10. To equity share forfeiture account credit 3,000. To calls in arrears account credit 2,000. Being forfeited 500 shares of HEMA for non-payment of final call. 11. Bank account debit 2,000. Equity share forfeiture account debit 3,000. To equity share capital account credit 5,000. Being 500 forfeited shares of HEMA reissued at maximum permissible discount. Total debit 6 crore 40 lakh 61,000. Credit 6 crore 40 lakh 61,000. Illustration 10. Siddhapur Isabgul Limited issued 6 lakh equity shares of Rs 10 each at a premium Rs 7 per share. The amount was payable as under Rs 10 per share on application including premium, Rs 4 per shares on allotment, Rs 3 per share on final call. Applications were received for 9 lakh shares. Excess applications were rejected and money paid thereon was refunded. Siddharaj, who was allotted 6,000 shares, did not pay money due on allotment and hence his shares were forfeited after allotment. Jainsi, who was allotted 4,000 shares, did not pay money due on final call and hence his shares were forfeited after final call allotment and final call amount was received on remaining shares. Company reissued 6,000 shares of Siddharaj at Rs 7 per share to Meenal and 4,000 shares of Jainsi at Rs 6 per share to Rudra. Pass necessary journal entries in the books of company to record above transactions and also prepare shares for future account. Answer. Necessary calculation. On application, 9 lakh shares into Rs 3 is equal to Rs 27 lakh plus securities premium 9 lakh shares into Rs 7 is equal to Rs 63 lakh. Bank account Rs 90 lakh minus rejected application 3 lakh shares into Rs 10 is equal to Rs 30 lakh. Rs 60 lakh. On allotment, 6 lakh shares into Rs 4 is equal to Rs 24 lakh. 6,000 shares into Rs 4 is equal to Rs 24,000 is equal to Rs 23 lakh 76,000. On forfeiture shares, Rs 3 is deposited by Siddharaj of 6,000 shares as capital. So, 6,000 into Rs 3 is equal to Rs 18,000 will be credited to share forfeiture account. On final call, 5,94,000 share into Rs 3 is equal to Rs 17,82,000 minus calls in arrears 4,000 share into Rs 3 is equal to Rs 12,000. bank account is equal to rupees 17,70,000. On forfeiture shares, that is rupees 7 into 3 plus 4 is deposited by JC of 4,000 shares as capital. So 4,000 into rupees 7 is equal to rupees 28,000 will be credited to share forfeiture account. Journal entries of Siddhapur ISAB Gul Limited. Date, particulars, ledger folio number, debit, credit. 1. Bank account debit 90 lakh to equity share application account credit 90 lakh. Being the share application money received on 90 lakh shares at rupees 10 per shares. 2. Equity share application account debit 90 lakh to equity share capital account credit 18 lakh. To securities premium account credit 42 lakh. To bank account credit 30 lakh. Being sanctioned 6 lakh shares amount at rupees 3 per share is transferred to share capital account and premium amount at rupees 7 per share is transferred to securities premium account and excess share application money refunded. 3. Equity share allotment account debit 24 lakh to equity share capital account credit 24 lakh. Being the amount becomes due and 6 lakh shares at rupees 4 per share on allotment. 4. Bank account debit 23,76,000 to equity share allotment account credit 23,76,000. Being amount received on 5,94,000 shares which was due on allotment except on 6,000 shares of Siddharaj. 5. Equity share capital account debit 42,000. 6,000 shares into rupees 7. To equity share forfeiture account credit 18,000. To equity share allotment account credit 24,000. Being after allotment forfeited 6,000 shares of Siddharaj as necessary amount not received thereon. 6. Equity share final call account debit 17,82,000 to equity share capital account credit 17,82,000. Being the amount becomes due on 5,94,000 shares on final call at rupees 3 per share. 7. Bank account debit 17,70,000 to equity share final call account 17,70,000. Being amount received on 5,90,000 shares which was due on final call except on 4,000 shares of JC. 8. Equity share capital account debit 40,000. 4,000 shares into rupees 10. To equity share forfeiture account credit 28,000. To equity share final call account credit 12,000. Being forfeited 4,000 shares of JC for non-payment of share final call. 9. Siddharaj. Bank account debit 42,000. 6,000 shares into rupees 7. Equity share forfeiture account debit 18,000. To equity share capital account credit 60,000. Being forfeited shares of Siddharaj sold to Minal at rupees 7 per share. 10. JC. Bank account debit 24,000. 4,000 shares into rupees 6. Equity share forfeiture account debit 16,000. 4,000 shares into rupees 4. To equity share capital account credit 40,000. Being forfeited shares to JC sold to Rudra at rupees 6 per share. 11. Equity share forfeiture account debit 12,000 to capital reserve account credit 12,000. Being credit balance of the share forfeiture account is transferred to capital reserve account. Total debit 2,65,22,000. Credit 2,65,22,000. Shares forfeiture account. Date, particulars, amount. Date, particulars, amount. 9. To equity share capital account 18,000. 10. To equity share capital account 16,000. 11. To capital reserve account 12,000. Total 46,000. 5. Buy share capital account 18,000. 8. Buy share capital account 28,000. Total 46,000. Section 11. A limited company issued 18 lakh equity shares of rupees 10 each. Amount called up per share was as under. Rupees 3 per share on application. Rupees 3 per share on first call. Rupees 2 per share on allotment. Rupees 2 per share on final call. 1. All amounts due were received on due dates except from the following persons. 2. Ami, who was holding 1,200 shares, did not pay money due on allotment, first call and final call. 3. Rami, who were holding 800 shares, did not pay money due on first call and final call. 4. Gami, who was holding 1,600 shares, did not pay amount due on final call. 5. After necessary formalities, all the shares of these three persons were forfeited and were reissued at Rs 8 per share. Write journal entries in the books of company for forfeiture and reissue of forfeited shares. Answer. Calculation of amount which is received and which is not received on shares forfeited. Note. Amount not received is shown in brackets. Number of shares. On application Rs 3 per share. On allotment Rs 2 per share. On first call Rs 3 per share. On final call Rs 2 per share. Total amount received in rupees. Ami 1,200, 3,600, 2,400, 3,600, 2,400, 3,600. Rami 800, 2,400, 1,600, 2,400, 1,600, 4,000. Gami 1,600, 4,800, 3,200, 4,800, 3,200, 12,800. Amount not received 2,400, 6,000, 7,200. Amount received 10,800, 4,800, 4,800. 20,400. Total number of shares 3,600. Journal entries in books of company. Date, particulars, ledger folio number, debit, credit. 1. Equity share capital account debit 36,000. 3,600 shares into Rs 10. To forfeited shares account credit 20,400. Total amount received. To share allotment account credit 2,400. To shares first call account credit 6,000. To shares final call account credit 7,200. Being total 3,600 shares of Ami, Rami and Gami which were forfeited because of not received of full amount due on shares. 2. Bank account debit 28,800. 3,600 shares into Rs 8. Forfeited shares account debit 7,200. 3,600 shares into Rs 2. To equity share capital account credit 36,000. 3,600 shares into Rs 10. Being reissue of forfeited shares at Rs 8 per shares. 3. Forfeited share account debit 13,200 to capital reserve account credit 13,200. Being balance of forfeited share account Rs 13,200, Rs 20,400 minus Rs 7,200 transferred to capital reserve account. Illustration 12. Kapoor Media Limited issued 1,20,000 equity shares of Rs 10 each at premium of Rs 80 per share for public subscription. Company called up the amount including share premium in 4 equal installments. It means on application, on allotment, on first call and on final call. Company received application for 1,60,000 equity shares. Excess applications were rejected and money paid thereon was refunded. Shahid, who was holding 4,000 shares, failed to pay first call and final call on shares held by him. His shares were forfeited after due formalities. These forfeited shares were issued to Ranbir at a premium of Rs 70 per share and the amount on this was received by the company. Write necessary journal entries in the books of company to record about transaction and also prepare securities premium account. Answer. On application, 1,60,000 shares into Rs 2.50 is equal to Rs 4 lakh plus securities premium 1,60,000 shares into Rs 20 is equal to Rs 32 lakh, Rs 36 lakh minus rejected application 40,000 shares into Rs 22.50 is equal to Rs 9 lakh is equal to Rs 27 lakh. On allotment, share capital 1,20,000 shares into Rs 2.50 is equal to rupees 3 lakh plus securities premium 1,20,000 shares into rupees 20 is equal to rupees 24 lakh. Bank account is equal to rupees 27 lakh. On first call as well as final call, share capital 1,20,000 shares into rupees 2.50 is equal to rupees 3 lakh plus securities premium 1,20,000 shares into rupees 20 is equal to rupees 24 lakh. Bank account is equal to rupees 27 lakh minus calls in arrears 4,000 shares into rupees 22.50 is equal to rupees 90,000 is equal to rupees 26 lakh 10,000. Journal entries of Kapoor Media Limited. Date, particulars, ledger folio number, debit, credit. 1. Bank account debit 36 lakh. Equity share application account credit 36 lakh. Being the amount received on 1,60,000 equity shares at Rs 22.50 per share with application. 2. Equity share application account debit 36 lakh to equity share capital account credit 3 lakh to securities premium account credit 24 lakh to bank account credit 9 lakh. Being sanctioned 1,20,000 shares amount at Rs 2.50 per share is transferred to share capital account and premium account at Rs 20 per share is transferred to securities premium account and excess amount refunded. 3. Equity share allotment account debit 27 lakh to equity share capital account credit 3 lakh to securities premium account credit 24 lakh. Being the amount becomes due on 1,20,000 shares at Rs 2.50 per share for allotment and Rs 20 per share for premium. 4. Bank account debit 27 lakh to equity share allotment account credit 27 lakh. Being the amount which was due on allotment is received. 5. Equity share first call account debit 27 lakh to equity share capital account credit 3 lakh to securities premium account credit 24 lakh. Being the amount becomes due on 1,20,000 shares at Rs 2.50 per share for first call and Rs 20 per share for premium. 6. Bank account debit 26 lakh 10,000 to equity share first call account credit 26 lakh 10,000 being the amount received on 1,16,000 shares at Rs 22.50 per share which was due on first call. 7. Equity share final call account debit 27 lakh to equity share capital account credit 3 lakh to securities premium account credit 24 lakh being the amount becomes due on 1,20,000 shares at Rs 2.50 per share for final call and Rs 20 per share for premium. 8. Bank account debit 26 lakh 10,000 to equity share final call account credit 26 lakh 10,000 being the amount received which was due on final call except 4,000 shares. 9. Equity share capital account debit 40,000 4,000 shares into Rs 10. Securities premium account debit 1,60,000 4,000 shares into Rs 40. To equity share forfeiture account credit 20,000. To equity share first call account credit 90,000. To equity share final call account credit 90,000. Being forfeited 4,000 shares as the first call and final call money not received thereon. 10. Bank account debit 3,20,000 4,000 shares into Rs 80. To equity share capital account credit 40,000. To securities premium account credit 2,80,000. Being forfeited 4,000 shares reissued at Rs 80 per shares with premium. 11. Equity share forfeiture account debit 20,000 to capital reserve account credit 20,000. Being the balance of share forfeiture account is transferred to capital reserve account. Total debit 2,37,60,000. Credit 2,37,60,000. Securities premium account. Date, particulars, journal folio, amount. Date, particulars, journal folio, amount. 9. To equity share first call account 80,000. 9. To to equity share final call account 80,000. Balance carried forward 97,20,000. Amount 98,80,000. 2. By equity share application account 24 lakh. 3. By equity share allotment account 24 lakh. 5. By equity share first call account 24 lakh. 7. By equity share final call account 24 lakh. 10. By bank account 2,80,000. Amount 98,80,000. Pro rata allotment of shares. When the number of shares applied for is more than the number of shares offered for subscription by company is said to be oversubscribed. In this situation, shares can be allotted by the company by any of the following alternatives. 1. Full allotment of shares against shares applied by applicants. Example, allotment of 500 shares to applicants of 500 shares. 2. Not a single share allotted to share applicant against their application. Example, not to allot single share to applicants of 200 shares. 3. Allotted shares in proportion to share applicants against their application. Example, allotment to 300 shares to applicants of 500 shares. So, as per 3. Situation, some shares are allotted on pro rata basis to share applicants against their share application. In this situation, the excess amount received on application from applicants is utilized towards the even amount due on allotment. After this, even if there is any surplus amount, then it will be adjusted towards share calls. If still any surplus amount remains, then it will be refunded to share applicants. Illustration 13. Bharti Food Products Limited issued 80,000 equity shares to the public at Rs 10 per share. Company called up the amount as under. 1. On application Rs 4 per share, on allotment Rs 3 per share, and on final call Rs 3 per share. 2. Applications were received from public for 1,20,000 shares. Its allotment was made by company as under. Full allotment was made to applicants of 32,000 shares. Not a single share was allotted to applicants of 24,000 shares. 48,000 shares were allotted to applicants of 64,000 shares. All amounts were received in time. Past journal entries in books of the company from above information. Answer. Journal entries in the books of Bharti Food Product Limited. Date, particulars, ledger folio number, debit, credit. 1. Bank account debit 4,80,000. To equity share application account credit 4,80,000. Being application money received on 1,20,000 shares at Rs 4 per share. 2. Equity share application account debit 4,80,000. To equity share capital account credit 3,20,000. 80,000 shares into Rs 4. To equity allotment account credit 64,000. 16,000 shares into Rs 4. To bank account credit 96,000. 24,000 shares into Rs 4. Being transfer share application money to equity share capital account for 80,000 allotted shares at Rs 4 per share. Refund money on 24,000 shares at Rs 4 per share and excess amount of applicants of 16,000 shares to share allotment account at Rs 4 per share. 3. Equity share allotment account debit 2,40,000. To equity share capital account credit 2,40,000. Being allotment money due on 80,000 shares at Rs 3 per share. 4. Bank account debit 1,76,000. To equity share allotment account credit 1,76,000. Being after deducting Rs 64,000 of advance allotment money, balance amount fully received on allotment. 5. Shares final call account debit 2,40,000. To equity share capital account credit 2,40,000. Being amount due on final call at Rs 3 per share. 6. Bank account debit 2,40,000. To shares final call account credit 2,40,000. Being full amount is received on final call. Total debit 18,56,000. Credit 18,56,000. Calculation. Number of share application. Amount paid on application in rupees. Share allotted. Transfer to share application in rupees. Transfer to share allotment in rupees. Transfer to share final call in rupees. Amount refunded in rupees. 32,000, 1,28,000. 32,000, 1,28,000. Dash, dash, dash. 24,000, 96,000. Dash, 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 dash. 96,000. 64,000, 2,56,000. 48,000, 1,92,000. 64,000. Dash, dash. 1,20,000. 4,80,000. 80,000. 3,20,000. 64,000. Dash, 96,000. 14. Gujarat Fertilizers Limited of Bharuch issued 4,50,000 shares of ₹10 per share. Amount called up on application ₹3 per share. On allotment ₹3 per share. On first call ₹2 per share. And on final call ₹2 per share. Applications were received from public of 6,20,000 shares. Allotment of 4,50,000 shares was made pro rata to 5,40,000 share applicants. Amount paid on applications by remaining applicants were refunded by company. Mahesh, to whom 1,000 shares were allotted, failed to pay the final call. His shares were forfeited and all the shares were reissued at ₹5 per share. Past journal entries for the above transactions in the books of company. Answer. Journal entries of Gujarat Fertilizers Limited. Date, particulars, ledger folio number, debit, credit. 1. Bank account debit 18,60,000. Equity share application account credit 18,60,000. Being application money received on 6,20,000 shares at ₹3 per share. 2. Equity share application account debit 18,60,000. Equity share capital account 4,50,000 shares into ₹3 credit 13,50,000. Equity share allotment account 90,000 shares into ₹3 credit 2,70,000. To bank account credit 80,000 shares into ₹3 2,40,000. Being from application money, amount transferred to share capital account of allotted shares, excess amount of share application transferred to share allotment account and amount refunded to applicants of 80,000 shares. 3. Equity share allotment account debit 13,50,000. Equity share capital account credit 13,50,000. Being allotment amount due on 4,50,000 shares at ₹3 per share. 4. Bank account debit 10,80,000. Equity share allotment account credit 10,80,000. Being amount received on share allotment. 5. Equity share first call account debit 9 lakh. Equity share capital account credit 9 lakh. Being first call amount due on 4,50,000 shares at ₹2 per share. 6. Bank account debit 9 lakh. Equity share first call account credit 9 lakh. Being full amount received on amount due on first call. 7. Equity share final call account debit 9 lakh. Equity share capital account credit 9 lakh. Being final call amount due on 4,50,000 shares at ₹2 per share. 8. Bank account debit 8,98,000. Equity share final call account credit 8,98,000. Being amount received on final call except 1,000 shares of Mahesh at ₹2 per share. 9. Equity share capital account debit 1,000 shares into ₹10 10,000. Equity share final call account credit 2,000. Equity share forfeiture account credit 8,000. Being forfeited 1,000 shares of Mahesh for non-payment of final call. 10. Bank account debit 1,000 shares into ₹5 5,000. Equity share forfeiture account debit 5,000. Equity share capital account credit 10,000. Being reissue of 1,000 forfeited shares of Mahesh at ₹5 per share. 11. Equity share forfeiture account debit 3,000. To capital reserve account credit 3,000. Being balance of share forfeited account is transferred to capital reserve account. Total debit 97,71,000. Credit 97,71,000. Registration 15. Nupur Limited issued 5 lakh equity shares of ₹10 each at premium of 100%. Amount called up per share is as under. On application ₹5, on allotment ₹2 plus premium. On first call and final call ₹3. Applications were received 2 and half times, out of which 2/5 share applications were rejected fully and pro rata allotment was made to the remaining applications. Excess application money were credited to allotment money and still if any surplus then credited to share calls. Write necessary journal entries in the books of Nupur Limited. Answer. Calculation. 100% premium on ₹10 per share means ₹10. Total application received is equal to 5 lakh into 2.5 is equal to 12,50,000. Total application received. Share allotment. 12,50,000 into 2/5 is equal to 5 lakh. 7,50,000, 12,50,000. 5 lakh, that is 3:2 ratio, 5 lakh. Working of amount received by company on allotment. Amount received on application is equal to ₹37,50,000. 7,50,000 shares into ₹5 less application amount of allotted share is equal to ₹25 lakh. Amount 5 lakh shares into ₹5. Surplus amount transferred to share allotment is equal to ₹12,50,000. Amount called on share allotment 5 lakh shares into 12 is equal to ₹60 lakh less advance amount received on share allotment is equal to ₹12,50,000. Amount received on share allotment is equal to ₹47,50,000. Journal entries in the books of Nupur Limited. Date, particulars, ledger folio number, debit, credit. 1. Bank account debit 62,50,000. Equity share application account credit 62,50,000. Being amount received on 12,50,000 shares at ₹5 per share from application. 2. Equity share application account debit 62,50,000. Equity share capital account credit 25 lakh. 5 lakh shares into ₹5. Equity share allotment account credit 12,50,000. Surplus amount. To bank account credit 25 lakh. Refund to applicants. Being amount on 5 lakh allotted shares to share capital account. Surplus amount to share allotment account where amount refunded on 5 lakh rejected shares to applicants. 3. Equity share allotment account debit 60 lakh. To equity share capital account credit 10 lakh. To securities premium account credit 50 lakh. Being amount called on 5 lakh shares at ₹12 per share, including premium of ₹10. 4. Bank account debit 47,50,000. To equity share allotment account credit 47,50,000. Being amount received for share allotment. 5. Equity first and final call account debit 15 lakh. To equity share capital account credit 15 lakh. Being amount called on 5 lakh shares at ₹3 per share. 6. Bank account debit 15 lakh. To equity first and final call account credit 15 lakh. Being amount received on call. Total debit 2,62,50,000. Credit 2,62,50,000. Opening share application and allotment account. Nowadays, it is practice to keep a common account for application and allotment instead of two separate accounts. In such a case, a joint account named share application and allotment account is opened. Then, all entries relating to application and allotment are made in this account. When a joint account is maintained, the journal entries are recorded in the following manner. 1. On receipt of application money, bank account debit, number of shares applied into application money per share to share application and allotment account credit. 2. On transfer of application money to share capital and allotment money due, share application and allotment account debit, number of shares allotted into application money per share plus allotment money per share to share capital account credit. 3. On refund of money to applicants on rejected applications, share application and allotment account debit, number of shares rejected into application money per share to bank account credit. 4. On receipt of allotment money, Bank account debit, actual amount received from shareholders on allotment. To share application and allotment account credit. 15. Issue of shares for consideration other than cash. Usually, when company issues shares, it gets cash against such issue of shares. However, in some circumstances, company does not get cash against issue of shares. Such situations could be as under. 1. When company does not pay cash and issue shares for purchases of any assets or business. 2. When company issues shares in lieu of remuneration payable to promoters. 3. When company issues shares towards underwriting commission to underwriters. 4. When company issues bonus shares to existing shareholders. 1. Shares issued against purchase of assets or business. When company purchases any assets or purchases any business, it may issue shares against consideration instead of giving cash. Example, company issued sum of equity shares in consideration of machinery purchased of Rs 2 lakh. Here, following journal entries are made. Number 1. Machinery account debit 2 lakh to vendors account credit 2 lakh. Number 2. Vendors account debit 2 lakh to equity share capital account credit 2 lakh. If company issue equity shares of Rs 1,50,000 and balance amount by check in consideration of machinery purchased of Rs 2 lakh, the entry will be as under. Vendors account debit 2 lakh to equity share capital account credit 1,50,000 to bank account credit 50,000. When company purchases any business and shares are issued for consideration, then if value of issued shares is higher than the net assets of business, the amount of differences is transferred to goodwill account. But if the value of issued shares is less than the net assets of business, the difference is transferred to capital reserve account. 16. Aakash Limited issued 8 lakh equity shares of Rs 10 each towards purchase of business of Patel Brothers. Company purchased following assets and liabilities of the firm. Land and building 28 lakh, plant and machinery 16 lakh, vehicles and furniture 20 lakh, debtors 4 lakh, creditors 8 lakh, stock 8 lakh, bills receivable 8 lakh. Write journal entries in the books of company. If company issue 3,50,000 shares of Rs 10 each at a premium of Rs 10 per share towards purchase of business of Patel Brothers, then pass journal entries in the books of company. Answer. Net assets of business purchased by the company shall be calculated as under. Land and building 28 lakh, plant and machinery 16 lakh, vehicles and furniture 20 lakh, debtors 4 lakh, stock 8 lakh, bills receivable 8 lakh, 84 lakh, less creditors 8 lakh, net assets 76 lakh. Purchase consideration is equal to 8 lakh equity shares into Rs 10 is equal to Rs 80 lakh. Purchase consideration minus net assets is equal to goodwill. Rs 80 lakh minus Rs 76 lakh is equal to Rs 4 lakh. Journal entries in the books of Aakash Limited. Date, particulars, ledger folio number, debit, credit. 1. Land and building account debit 28 lakh. Plant and machinery account debit 16 lakh. Vehicle and furniture account debit 20 lakh. Debtors account debit 4 lakh. Stock account debit 8 lakh. Bills receivable account debit 8 lakh. Goodwill account debit 4 lakh. To creditors account credit 8 lakh. To Patel Brothers account credit 80 lakh. Being purchase of business of Patel Brothers firm. 2. Patel Brothers account debit 80 lakh. To equity share capital account credit 80 lakh. Being issue of 8 lakh equity shares of Rs 10 each against purchase consideration. Here, if company issues 3,50,000 shares, face value of share is Rs 10 at a premium of Rs 10 per share to Patel Brother, then purchase consideration is equal to 3,50,000 shares into Rs 10 is equal to Rs 35 lakh. Share capital account 3,50,000 shares into Rs 10 is equal to Rs 35 lakh. Premium account. Total purchase consideration rupees 70 lakh. Net assets is equal to rupees 76 lakh. Net assets minus purchase consideration is equal to capital reserve. Rupees 76 lakh minus rupees 70 lakh is equal to rupees 6 lakh. Journal entries in the books of Akash Limited. Date, particulars, ledger folio number, debit, credit. 1. Land and building account debit, 28 lakh. Plant and machinery account debit, 16 lakh. Vehicles and furniture account debit, 20 lakh. Debtors account debit, 4 lakh. Stock account debit, 8 lakh. Bills receivable account debit, 8 lakh. To creditors account credit, 8 lakh. To capital reserve account credit, 6 lakh. To Patel Brothers account credit, 70 lakh. Being purchase of business of Patel Brothers firm. 2. Patel Brothers account debit, 70 lakh. To equity share capital account credit, 35 lakh. To securities premium account credit, 35 lakh. Being issue of 3,50,000 shares of rupees 10 each with a premium of rupees 10 per share against purchase consideration. 2. Company may issue shares as remuneration to promoters or others who render their services. Sometimes company issues shares to its promoters for their services. Similarly, company may issue shares towards remuneration to other persons who render managerial services or any other services. For example, company issue 12,000 equity shares of rupees 10 each to its promoter for his services. In this case, the journal entry will be as under: incorporation or formation expenses account debit 1,20,000 to equity share capital account credit 1,20,000. For example, company issue equity shares of rupees 80,000 towards remuneration to a person who renders services for company. In such case, the journal entry will be as under: remuneration to respective service account debit 80,000 to equity share capital account credit 80,000. 3. Issue of shares to underwriters towards underwriting commission. Public company issues their shares in the public after getting certificate of incorporation. As per Company Act, at least 90% subscription should be received from the issued shares. It is known as minimum subscription. If company does not receive minimum subscription, company cannot commence business or total subscription would be cancelled. To avoid such situation, underwriting agreement is entered into so that if shares are not fully subscribed, the brokers underwriting the shares will purchase the remaining shares. For this work, underwriters are paid some fixed commission. Sometimes, such commission is given by issue of shares instead of paying the same in cash. In such case, journal entry in the books of company shall be passed as under: Number 1. When liability to pay commission to underwriters has been decided. Underwriting commission account debit to underwriters account credit. Number 2. When company pays such commission by issue of shares. Underwriters account debit to equity share capital account credit. 4. Issue of bonus shares to existing shareholders. Shares issued without any consideration by a company to its present shareholders out of accumulated profits are known as bonus shares. The following two journal entries are written when bonus shares are issued by company. Number 1. For providing for bonus out of general reserve or profit and loss account. General reserve account debit, profit and loss account debit to bonus to shareholders account credit. Number 2. For issue of bonus shares. Bonus to shareholders account debit to equity share capital account credit. 16. Presentation of share capital in company's vertical balance sheet. Company's balance sheet of dash, company as on dash. Particulars, note number, amount current year, amount previous year. 1. Equity and liabilities. Shareholders fund. A. Share capital. 1. B. Reserve and surplus. 2. C. Money received against share warrants. Non-current liabilities. Current liabilities. Other current liabilities. Balance of call in advance. Notes of accounts. 1. Share capital. Authorized capital. dash equity shares of rupees dash each, dash preference shares of rupees dash each, issued capital, dash equity shares of rupees dash each, dash preference shares of rupees dash each, subscribed capital, subscribed and fully paid capital, dash equity shares of rupees dash each, dash preference shares of rupees dash each. Of the above shares, dash shares are allotted as fully paid up pursuant to a contract without payments being received in cash. Subscribed but not fully paid capital, dash shares of rupees dash each, rupees dash per share called up, rupees dash less calls in arrears. 1. By directors and officers of the company, rupees dash. 2. By others, rupees dash. At forfeiture share, rupees dash. 2. Reserve and surplus, securities premium reserve, capital reserve.